Okay, you've probably seen this blowing up on social media, right? This crypto mining company, Bitmine, or BMNR, has been at the center of this absolute firestorm. We're seeing all these claims of a massive, almost unbelievable institutional buy-in. So the question is this all just hype, or are we watching history being made in how Wall Street plays crypto?
This right here. This is the claim that kicked the whole thing off, a jump from just 6% institutional ownership to nearly 32%. And get this, in less than 2 weeks. That's billions of dollars pouring into one single stock, like lightning fast. It's the kind of move that makes everyone, and I mean everyone, stop and ask, what on earth is going on here?
So, is this just another speculative frenzy, another crypto fever dream, or is there some kind of calculated strategic play happening right under our noses? We're going to cut through all that social media noise and get right to the facts. Okay, let's dive into this.
First things first, before we can even begin to understand the why, we have to verify the what. Are these absolutely insane numbers even real? We're going to follow the trail of what they call the smart money and see if the data actually backs up all this hype.
So yeah, we're moving past the viral posts and getting into the verifiable data. Let's see what the actual institutional filings have to say.
And wow, the numbers are just staggering. The data confirms it. Institutions now hold over 98 million shares of Bitmine. This isn't some small position. This is a massive, massive accumulation. And if you put a dollar value on that, we are talking about a position worth over $2.3 billion. That is a huge commitment from some of the biggest players in the entire world of finance.
And look, this isn't just one or two big funds making a wild bet. The number of institutions holding BMNR has more than doubled, jumping from around 150 to now over 375. This shows a really broad-based conviction all across Wall Street.
And this chart just perfectly illustrates the sheer scale of this shift. I mean, look at this before and after. In early November, institutions held, around 20 million shares. By the end of the month, it's nearly 100 million. The value just exploded by over 370%. And you know what's crazy? That viral claim, it turns out it was actually underselling the story.
Now, what's really fascinating here is who these institutions are. We're talking about the whales, the big fish. Morgan Stanley alone now holds nearly a quarter of the entire company. When a giant like that makes a move this big, well, that's not just a bet, that's a major strategic decision.
Okay, so the numbers are real. The surge is, frankly, historic. But that brings us to the most important question of all. Why? What is the real strategy behind this massive institutional rush into what's supposed to be just a crypto mining company?
The answer, it seems, lies in this thing called the Ethereum Treasury play. And this is a really big deal, because it's a strategy that could start rewriting the whole rule book for corporate finance. So think of Bitmain less like a gold miner digging for gold, and more like a totally new kind of bank, one that keeps its vault full of Ethereum instead of dollars. Institutions aren't just buying a mining company, they're buying a proxy for ETH.
And this isn't just some idea, it's not a hypothetical. I mean, look at their actual balance sheet. Bitmain now holds over 3.6 million ETH. To put that into perspective, that is 3% of the entire supply of Ethereum in existence, all held by just one company. Their total crypto and cash holdings now worth over $11 billion.
And they're not even done yet. The company has a publicly stated goal they're calling the alchemy of 5%. Their mission is to accumulate a full 5% of all Ethereum. This is just a massive high-conviction bet on the entire future of the Ethereum ecosystem.
So this all explains the strategy, right? But it doesn't quite explain the timing. Why did all these major institutions decide to pile in during one single 2-week period? Let's try and decode the market conditions that created this absolute perfect storm.
A huge reason is leverage. It's all about leverage. After Bitmain announced its new Treasury strategy, its stock jumped almost 20% in a single day. Meanwhile, Ethereum itself, it was up only about 5%. So for these big institutions, BMNR stock became a way to get amplified exposure to ETH's upside, all without the headaches and risks of holding the crypto directly.
It was really just a convergence of a bunch of factors. You had all this positive sentiment spilling over from Bitcoin's recent cycle, and institutions were looking to buy the dip in Ethereum right after the latest ETF news. Bitmain offered them that leveraged exposure plus this really nice added bonus of generating income by staking its massive ETH holdings, earning rewards for helping secure the network. It was just the right asset at exactly the right time.
So we've got a verified institutional surge, a really clear strategic play, and perfect market timing. But does that make it a sure thing? Let's look at this from both sides, the bull case and the very, very real risks involved here.
Okay, so the bull case is pretty strong. Having giants like Morgan Stanley on board, that provides a ton of validation and can help stabilize the price. It's a clear, high-conviction bet on Ethereum. But the risks are just as big. I mean, the stock is tied directly to crypto's notorious volatility, and regulatory scrutiny on this kind of treasury strategy is a huge unknown. Plus, we have to remember, this ownership data always has a lag, so the picture could already be changing as we speak. So the crucial point is, this isn't just a high-stakes bet on one company. It's a test case for a whole new way of doing business.
And that ultimately brings us to the final question. Is Bitmine pioneering a brilliant new corporate playbook for the digital age, turning company balance sheets into crypto investment vehicles? Or is this massive concentration of institutional capital creating the poster child for a bubble that's just waiting to pop at the first sign of trouble? The smart money has clearly placed its bet. Now the rest of the market just has to wait and see how it all plays out.